Namaste Dilip ji, and what a fantastic performance Waaree Renewable Technologies has come up with. I am sure there is a 5-7 day party going in the group as well after the listing of Waaree Energy, but a very strong show from the renewables business as well. 524 crores is the top line versus 150 crores a year ago and 236 crores in the first quarter. Profit after tax is 54 crore rupees versus 21 crore rupees in the year ago quarter. What brought about this dramatic change in sentiment? What are the reasons behind this change in profit and growth in revenue?
Good afternoon, Shailendra ji. And I just want to draw your attention. A while back, you were talking everything is green. I just want to draw your attention. We are also in green business. We are in energy transition.
क्या बात है?
So definitely, I would like to touch upon your question that, what led to our historic highest ever quarter performance is our volume growth. We were backed by a strong order book in the beginning of the year, and we have executed some of our projects during the quarter at about 487 megawatt that we have delivered this quarter. That volume has led to this super performance from our company. That's the reason, where we are at.
Okay. So what is the existing order book that Waaree Renewables has at this point of time, and how many new orders were won in the quarter just gone by?
In the just quarter gone by, we have won, about 2 to 3 order books. One was 30 megawatt that we won, but those were small orders trickling in. The major orders were won up to our March point, where we were at on 1st April, we were at 2.3 gigawatt of business, outstanding to be completed yet. Right now, we are at 1.7 gigawatt. And important to note is that now we are in discussion with clients for about 17.8 gigawatt. The length of pipeline just keeps increasing. That's driven by the tail that this business offers in the energy transition spectrum. So the way to look at order book is, twofold. One is, we normally deliver between 1 to 1.2 crore average, depends on the scope, of business. So that's the one, and the balance of the work that is left is between 9 to 12 months that we ought to execute this 1.7 gigawatt of order book that we does.
Okay. Mr. Panjwani, I am also looking at how the operating margin has increased to about 14 percentage points. My apologies, it's slipped a bit. 14 percentage points in September 2024 versus 20 percentage points in the same quarter last year and 17% in June 2024. Did you sacrifice OPM for higher sales and higher profit? Is that the case, or is it competition?
I would put it neither of those. We in fact have guided our stakeholders to look at margins in sub 15 space. We have been telling quite some time. And if you look at the volume growth that we have achieved over last 3 years, you don't have to look at it in one go. Even if you analyze every quarter, the volume has just kept on increasing.
Yes.
And we have been telling that, the sustainable, reasonable margin ought to be sub 15%. So this volume increase is enough for us to give a solid performance on EBITDA and PAT level both, which is reflected in numbers today as well. We don't have to invest incremental capital to put on more volume. That gives us cushion for any little bit reduction in margins, definitely. But our ROEs are still maintained. Our ROEs are well maintained now.
Fair point. And when you look at, so does one presume that 13-14% is the operating margin guidance for the next maybe 2 quarters or even more?
2 quarters definitely, but we would like to see, how the new order shapes up, at what margin they come in. But we do have internal benchmarks where we take only good orders. We don't chase orders for the sake of business. We chase orders for the sake of profitability as well.
So, okay, let's presume that for the next 2 quarters, OPM target is 14% as was in the second quarter. How about any guidance that you would like to share for profit after tax and revenue?
They will be in the same range as far as percentage is concerned. But, since we don't give guidance in a strict sense, the sense that we would like to give is that, as we said, the balance order book that is, 1.7 gigawatt ought to be completed in 9 to 12 months. If you drill it down to balance 6 months, we should complete about 1.2 to 1.3 gigawatt. Now, give the math of average that we do 1 to 1.2 crore. One can do a quick math and arrive at the numbers. It's not very difficult to do.
Mr. Panjwani, good afternoon. Sakshi this side. Good to be speaking with you. Congratulations on the stellar set of numbers that you have come through. Do tell us, the key factors that you've highlighted in your conversation with Shell that have, led your profits to nearly triple this time around. Can they continue to be sustained through the second half of this fiscal year as well?
Thanks, Sakshi, for highlighting that. The current order book itself is good enough for at least, next 2 quarters for us to sustain the numbers that we're talking. And we are, as I said, that we are chasing a strong pipeline of 17.8 gigawatt. Add to that what the sector in tail is offering, but that's what we speak in specifics. When you go into specifics, it's not only solar, it's the RTC, battery energy storage systems, hydrogen business that's coming up. There's enough cushion, and business available. Plus, you couple it with the environment that in which we operate as a group. We have got module in the group, which is Waaree Energies, and we have got battery, hydrogen. So we have got those expertise to deliver all this, value chain segment through our EPC arm.
Hmm. Okay, do tell us, sir, as far as your H1 revenue is concerned, that stands at around 761 odd crore rupees. For H2, do you see that, probably inching higher to over 800, 900 odd crore rupees for H2? Do you think that is doable?
Well, Sakshi, if you look at our H1 billing, we have already crossed last year's entire turnover.
Okay.
And as I said, while back that, the 1.2 to 1.3 gigawatt that we ought to deliver in the next 6 months will definitely see us through higher than this number.
Okay. And on the margins front, sir, could you help us understand what is the band you're looking forward for FY25 and maybe in FY26 as well? How do you see it panning out too?
Well, we are looking at sub 15% margin, but still double digit margin, higher double digit margin is what we are looking at this year. And, we also, as I said, we would like to take profitable projects. So, we don't want to chase projects for the sake of business. That's the unique positioning that Waaree Renewable brings on the table. So you can make a good sense of what the margins are going to be in the future as well with us.
Okay. Mr. Panjwani, when you break the order book, you have three main businesses, which is EPC, O&M, and also some sort of power production on the independent side. Can you break down the overall order book into these three segments, and how much of it is from the government?
Yeah. So, from the government is now roughly about 15 to 20% business as the easier business right now for us. As far as, the three segments you rightly highlighted, a majority of our business is in EPC segment.
Okay. Mr. Panjwani, do highlight for us which are the industries which are actually showing you the maximum demand at this point in time. Where are you getting the maximum orders from, and how do you see industry demand shaping up for the second half?
Well, the maximum demand that is shaping up is actually from utility scale IPP segment. But we do expect a lot of rooftop and corporate business to kick in going forward.
Okay. When we look at the average realization that you have per megawatt, what has been the range in the quarter gone by, and how does it compare annually?
Well, the range for us has been throughout same, between 1 to 1.2 crore, which I mentioned. Even if you look at, 524 upon 487, it's roughly in 1.1, 1.2 crore range, that we have been speaking. And we expect this to continue for next 2 quarters.
Okay. And how about fresh capacity? Is any of the new factories that is coming on stream in the next 2 quarters? What is the present capacity utilization at Waaree Renewables?
We don't have production space as such. We are in EPC construction. So, if you look at our manpower cost, that gives a reflection of how capacity addition is happening, because as we add manpower, we keep adding capacity to execute more projects.
Okay, got that. Do talk to us about the next 1 or 2 years, fiscal years. How will they look at? And do you have your own any internal targets for yourself to achieve? Maybe on the top line, the sales figures and the profitability. Where do you aim to reach over the next 1 or 2 fiscal years, sir?
Right now, our goal is to help clients in energy transition, as I said, and expand the horizon to battery energy storage system, pump storage, and hydrogen as and when it comes up. We want to participate in that. So next couple of years, we are putting down platform in place where where we can achieve more higher growth. I don't want to pin down to a number and be limited by that, because we are actually in really very exciting times, in terms of green energy that everyone is talking about.
Thank you, Mr. Panjwani, with that wonderful answer. We wish you all the best. And of course, yours has been a multi-bagger stock. I'm seeing returns of 228% each year over the last 3 years. Let's hope that performance and that mojo comes back now that both sequential and year-on-year growth are back into the quarterly numbers. Thank you so much for your time.
Thank you. Thank you.
Thank you.
If you like the video, do like, comment, share and subscribe.